Hello traders, hello everyone. Welcome to our new webinar. It's Monday, October 9th, and this is your free Elliott Wave session for the week ahead. So let me check if everything works fine. Can you hear my voice? Can you see our screen, please? If you can subscribe to our channel as well. So just please make sure that want to make sure that everything is fine. So if someone can please let me know in our chat box. Yes, all is fine. We have Anis here. Jin, our member, is here. Jetis, Mehmet, Alejandro, welcome, guys. Welcome on board. So I hope you all enjoyed your weekend. And now that you're ready for some of volatile week, it seems. So, as you know, the markets opened pretty volatile this week, driven by the conflict between Hamas and Israel. More importantly, we have seen a very strong move to the upside on crude oil. So, firstly, I want to cover this correlation, this chart, just to give you the whole perspective of what is going on. So, you can clearly see here that crude oil has seen a massive, let me see if I have this one placed right here. So, that was the open here. Uh, let me go back. Okay, so you can clearly see that crude oil is trading significantly to the upside. Okay, it's up around 5% or so. Then we have gold also moving to the upside because, as you know, in uncertain times, you will see gold usually moving to the upside and will hold the correlation with the US dollar because the stocks are trading to the downside because of fear. So when traders, investors are looking for safety, there will be gold and dollar, obviously. And because there is a war conflict, obviously that's why we are seeing crude oil also coming to the upside quite aggressively. But today is also some of the markets, not really sure which markets exactly, but there is a Columbus Day in the US. So there can be a little bit, well, we would expect to be a little bit quiet session, but obviously because of this conflict, this may not be the case. I still think that maybe even stocks could continue to the downside. We will cover those at the end. I will look at the DAX and the S&P 500 as usually. So here, if we go back to this overlay chart, we can see that even Bitcoin is now coming to the downside. Even Aussie Kiwi are doing quite well, but other markets are mostly somehow still in general speaking, still in trading down versus the US dollar. So I'm not sure if these risk on flows will be back already this week. We have also inflation data on that's, let me check. We have inflation data from the US coming out on Thursday. On Wednesday we have FOMC minutes. Thursday also the UK GDP, and on Friday Chinese inflation data. Okay, so this will be also all the key events that may impact the sentiment, obviously. Okay, so crude oil, if we start with crude oil, because it's been pretty volatile. Just a second here. Okay, so crude oil is making a very strong drop here, as you can see. If we just review firstly the higher degree chart, away from that very strong resistance around 90, above $90 per barrel. So I think that we are already in a higher degree wave B correction here, which could be even lower. So I know that currently we are seeing some massive gap to the upside, but keep in mind that so far we have already seen move of 4%. Now, if suddenly, let's say, we rally up towards close to $90 or so, that would be already what? Let me check. From that low, that would be almost what? 10% of the move of the bounce here on crude oil. So I think that maybe if we get 10% bounce away from last week close, I think this would be a little bit overreacted move. So I still think that at some point, maybe later this week, things will calm down a little bit, and maybe this will not spark into anything else. We will see how the events will unfold. But I just think that the next higher levels here around $90 could potentially be limited upside for crude oil. Now, from an Elliott Wave perspective, I still think that this could be a wave B rally, and that major support is around the 61.8% of this entire move up, which comes in also very nice here to form a wave 4. So I still think that this gap actually at some point should be filled. Okay, that's one thing. The next thing is that the Elliott Wave principle in general suggests that was an impulse, so you are now in a corrective rise. So I will not be looking for any kind of aggressive move to the upside here on crude oil. I think that things could be a little bit of volatile here between these ranges now when we have these events going on. So very nice, very important resistance. As I said, the former wave for swing low here is at 88.30, and then you have around $90, very nice strong psychological level here at the 61.8%. So I'm looking here to be a limited upside. But of course, this whole cycle here is still in the middle of the higher degree correction. So even by the end of the year, we may not get any kind of a clear or strong moves. We just should be aware that maybe there will be big important ranges in play with volatile moves. Okay. Also, if we now take a look on dollar index, so dollar index, I think it still can actually retest the highs. If we look closely here at the intraday substructures here, as long we are holding this major level, okay, if you're just trying to ignore the wave principle and just looking at the technical levels, that was clearly the very important support around 105.80. Okay, it was broken here back in September, then even retested at the end of September, and we moved higher. So as long we are above that level, that's still technically could potentially see even more upside, right? But if we look at the Elliott waves here, the sub waves, as long we are here at 105 level, okay, that's the invalidation level of this current cycle within a fifth wave. So if we think that that's a wave 4, the price should not fall below that level. Okay, so maybe we are going to see the final push to the upside and then a reversal, which certainly maybe could be the case if there will be volatile sessions this week. We could see some stops to be cleared on both sides of the market before we potentially hit and final resistance. So 108 still very important level in my opinion. As I said, it's still an uptrend, and this could be the next upward projection. But from there, I would be looking for potential sell-off into higher degree correction, or if we suddenly just say, let's say that I'm wrong and this channel support is broken, then drop below 105.15 would suggest that this wave 5 is already in place. Okay, but for now, I think that still it's a little bit too soon. Also, it will be very interesting and important. Let me check here to see what will be the inflation data from the US. Let me know if you can see this chart now. I'm on Forex Factory here, so I want to bring this on. So can you see the chart here of the CPI here on the yearly basis? Yeah, okay, perfectly. So you can see that over the last few months, the inflation was ticking higher. Okay, but now the expectation, the latest data was 3.7, but now the expectations are 3.6. So I think that this will be very important to see if maybe inflation is really going to cool down, or maybe we'll see even a continuation of this trend from the last 2 months. So if that would be the case, I mean, we certainly have to consider that crude oil energies have been higher in September. So maybe this number will be missed, and I think that this could potentially trigger another, but maybe final push to the upside on dollar. Okay, so definitely this is most likely the most important data for this week. Now let's take a look also on the euro dollar. So as you know, in Europe, not officially, but I mean, the data itself suggests that Europe is already in recession. We are seeing manufacturing German PME data. I think that it's around levels from 2010 20. So definitely housing may not do well there and could easily spread in the rest of the Europe. And I think that that's one of the reasons why euro is suffering so much lately. And also looking still here, I think that we potentially could be moving into this very strong major support. You have this former wave 4, there's also the 50% retracement, but unfortunately this bounce from the recent lows um, is not really impulsive, okay, at least not at this stage. So for now I still think that this could be easily wave 4 correction, maybe will unfold into something more complex. So obviously same thing as with dollar index, we are also at the 38.2%, but gap was lower, so I'm not really sure if the price will continue straight to the downside. Maybe this gap will be retested for once more, and then potentially we see another sell-off. Okay, but I think that still by the end of the year that we could stabilize. But for now, that's still a downtrend, and this will not change unless we see a massive turn to the upside and broken 1065 level. Okay, that's the invalidation, because wave 4 must not trade in the territory of a wave 1. Okay, so it looks like that for now we are trapped between these big levels, January low, and for now this invalidation level. So as long as we are between these two, for now I still somehow things that have to respect the downtrend. Okay, now let's take a look on cable. So pound was one of the weakest recently. So even this one, I mean, we have to respect what the market is doing. It's trading to the downside, and the current rise so far is still in three waves. If you will open the hourly chart, you will see that the rally is looking corrective. You're also, let me make this bold. You're also testing this lower trend line of this base channel, and normally when these base channels are broken, they confirm that you are in a wave 3, and after a rally into wave 4, the same channel can hold as a resistance. So that's the first resistance line. Then you have the midline and the outside line. Okay, if this upper is broken, then the trend will change, but as long as the price is trading below these lines, all of them could provide a very nice potential new swing high here. So watch out for potential new sell-off, and I think that pound is, for now, at least in the short term, it shows some very nice wave structure, if you ask me. Now looking at the daily chart here, you have this very interesting support still that could be retested going all the way back to March levels. Now a lot of markets, sure, if you are focusing on these swings, but a lot of markets reversed back to those March swing lows, and cable somehow is still lagging compared to this. I mean, DAX even broke below that, I think, if I'm not mistaken. S&P 500 also tested those levels, and maybe even pound at some point will find to will be looking to retest this level as well. So for now, the short-term structure suggests that we could go lower because the bounce is looking corrective, and for now we have this wave 4 swing support still a little bit lower here. Okay, so that's why I think that maybe this downtrend will stay intact for now. Now let's take a look on dollar yen. So again, let me grab this opportunity. If you are not here our subscriber on YouTube or TradingView, make sure to press the like button, subscribe to our channel so that you will support our free sessions, and I will make sure to continue to offer this kind of a free analysis in the future. Okay, now here we have dollar yen. Let me check my notes just real quick here. Okay, so dollar yen here, still it has 5 waves up. I mean, we can count 5 waves up from the July lows. Okay, we have moved out of a triangle where in which leg we can also see 5 subwaves right into this resistance around 150 that we've been tracking recently. This channel has also been broken on this. I'm not sure if it was intervention. I think that they denied that it was the intervention, but anyway, certainly looks like it has been an intervention, and dollar yen sold off temporary, because normally these kind of interventions will work just for the limited period of time. Okay, you still want and need a lot of more traders, institutions that will trade in this direction to make things to change the trend around. Okay, and also obviously we have to see US yields coming to the downside at the same time to help dollar yen come down away from that top. Okay, for now that's still not the case yet, and since we have seen only a spike towards this bearish level 147.30, that's now the next important level that should be broken to really make sure that we are topping out. But for now, on a smaller time frame, we have these three waves up. But I'm a little bit more careful here. I'm also looking for another interpretation now. Before I go to some of the new wave count here, if you remember back in September, at the end of, I think it was in September, and in general speaking, at the end of 2022, there were interventions around these levels. So you can clearly see that you are now at this very important massive zone right there. Okay, but for trend to change, we probably want to see this low, this price to come back below 145. Then big change in trend could unfold. Okay, but now if we look maybe for some different interpretation, check this these two lines. Okay, they are somehow showing us the shape of a wedge pattern. So maybe this can be even an ending diagonal. Okay, so that could be wave 1, 2, wave 3, sharp wave 4, and now wave 5. Okay, so here we still leave another chance for another push to the upside. Okay, and then a reversal. But this kind of overlap and potential wedge formation really suggests that this bull sooner or later could come to an end. So that's another wave count that would be observed. So even if we pass these highs here above 150, maybe a lot of traders will also look at this. Now, if that was some kind of an intervention point, okay, a lot of traders immediately jumped on the short side when they saw this massive spike to the downside, and that's most likely their stop level right now at the highs. Okay, so now imagine what happens if the market moves to a new high. Probably a lot of traders will be kicked out, or maybe there are new traders who are waiting with buy orders, okay, at this level. So even those could be on the wrong side if the market will turn around back to the downside. So that's also an interesting scenario which I think could really unfold. Okay, especially if dollar index is really also going to make that final push to the upside. Okay, now let's take a look also on Aussie dollar. Okay, so on Aussie, we are still at the very big levels here, 78.6%, but maybe there is another leg to the downside missing here. When looking at the 4-hour time frame, notice that this again could be some kind of a fifth wave trying to unfold as a wedge pattern ending diagonal here. And the reason is because, I mean, this rise for now is not really looking impulsive if stocks are still somehow weak. So if this risk off will resume at the start of the week, then even Aussie could retest the lows here. But I think that could be a beautiful pattern if you really fall to a new low at the start of the week and then turn around. That could be quite interesting. But for now, just saying that we are bottoming could be a little bit too early, because also looking at dollar versus Chinese yuan, somehow this one is still slow. Okay, so maybe that's still a way for some major push to the upside with a spike and then a reversal to the downside. Maybe this is something that we are waiting for, but clearly for now this looks like a corrective here. It's a very slow move, so if this one rallies, I think that Aussie will come back under the pressure. Okay, now let's take a look also on the S&P 500. Okay, so last time when we spoke, we said firstly daily chart. Okay, we said that this level here is very important, 4180, 4170, around there. Because if that's the wave 4, okay, with 3 subwaves, then wave 4 should not overlap this wave 1, okay? Because if that happens, then it means that this recovery away from October levels is not going to be impulsive, okay? And then something much more complex on a higher degree scale will most likely be the case, but still corrective, obviously, from all-time highs, because stocks, generally speaking, historically speaking, are just keep moving to the upside. So it's very important that each kind of a drop, if we can, if we respect the rules, we label as a correction, okay, and not something aggressive like a 1-2 to the downside, because you will be right one time in 20 years. So it's very important that on a higher degree chart, we just have to respect the trend and always try to label the wave count in the direction of the higher degree trend. Okay, so for now we are still holding this level 4170, 4180. We still have 3 waves to the downside. Also, as we discussed last week, we have these 5 subwaves within wave 5, but so far still we don't see this impulsive turn. That actually could be some kind of a 3 wave rise. So maybe wave 4 could be maybe something like that. It's also very probable, okay, that this is wave 4. You will see another push to the downside, and this could be easily, okay, the substructure with 5 subways here within wave 3. So I think that it's a little bit too early, but if we smash out this very big level here at the former wave A at 4400, then I think that we are turning around here, okay. So for now, it's still a little bit early, but I think that there are chances that this market will stabilize. Also, let me check. Here we have the Nasdaq 100 as well. Okay, so Nasdaq 100 could be making a 3 wave drop, but notice that this current subwave C didn't really manage to pass this wave A level, maybe just temporary spike. And looking at the 2-hour time frame here, really saying that this is bottom here. I'm not really sure. Maybe double bottom with a different kind of a technical approach could make sense, but in Elliott Wave terms, I just think that maybe something more aggressive is needed to complete the whole structure here of this correction for a wave C. So 14,300 maybe still the ideal support. Let's take a look on German DAX. Okay, so German DAX daily chart. Notice the very big level that goes all the way back to this, even to back to 2022 March. Okay, we came pretty close here. At the end of that same year, we retested, we moved to the upside. So we are now officially above that major pivot level. Okay, but I still think that could be maybe even retested, but it's very important, very strong support. There you have also the 38.2%. Why I'm repeating the 38.2%? Because normally whenever I'm tracking the higher degree correction, so that was the first leg completed because it was the 5-wave move. And whenever I'm tracking the higher degree correction, I want to see a minimum of 38.2% retracement of this higher degree ABC drop. Okay, so that's normally my minimum objective before I may start looking for completion of this correction. Of course, sometimes it's not always the same, because sometimes the first leg will be very, very extended, but if it's normal and it has a normal structure, then the 38.2% is something to consider. Okay, and I still think that maybe we'll see a retest of that level. Now, if you look here on the intraday chart, actually that is a 3-wave rise that stopped at the upper side of this channel. Okay, and I have been talking last week that we could be bottoming, maybe just temporary, but the upper side of the channel can be retested. we stopped there, we gapped lower, and so far we have 3 waves behind. So I cannot say that this low is already in place. We can definitely retest the lows, okay? And also, if we maybe try to do or maybe look at another wave structure here, okay? Maybe this could be even some kind of an ending diagonal here. Let me try. Not really the perfect, okay? Maybe this is the better solution. Okay, and then you have here 5 subwaves within that wave 3, so that would probably make sense. Okay, so that's another valid interpretation in my opinion. You can see a very nice, very strong resistance up here around 15,466, and since we have only 3 waves up, I just think that maybe this kind of a scenario would be much better, right? Maybe much more appropriate, and then you see this massive support on the daily chart to retest it. But what's good thing is that we already have this divergence going on here, so that's good. Also, when looking at the Euro 50 index, okay, what's good about this one is that this whole drop, as you can see, is very overlapping, right? Could be even an ending diagonal here, also potentially another final leg to the downside, and then a reversal. But this kind of a shape, wedge shape, normally will occur at the end of the corrective movement, so, or even at the end of impulsive movement. So the important is that this kind of a shape suggests that bears are losing strength, okay, because are much slower because of these overlaps compared to the first leg. So I think that markets here could be looking for some support not far away. Okay, maybe, as I said, maybe final push to the downside will come. Also, now what I have here, let me take a look on gold. So as I said earlier, gold has seen some very nice move to the upside. We gapped higher here. Okay, we could potentially be trying to be bottoming here, but I just think that maybe it's not even 24 hours yet, okay, for this potential reversal. So for me, before saying that low is in, maybe it's good to wait, especially during these volatile events, that you wait a little bit longer. Okay, maybe just on Wednesday we will have more clue if really we are bottoming or no. So I think that for now it's a little bit too soon. But looking at the intraday chart, okay, this was a pretty nice and aggressive move to the upside. So maybe where was gap, I think around 1830. So maybe this level support will be retested, and then you see a move to the upside. So if you're more like an intraday trader, then you definitely know where's your risk, should be below that level. Okay, but just keep in mind that even if we move back to a new low here, I still think that major support may not be far away. So 61.8% former wave 4. I just think that all of the important points are down here. Okay, so I think that by the end of the year, gold potentially will see turn to the upside. Also, I want to take a look on this COT data. So you can actually see that large speculators, okay, which are in green, let me do this to 5 years, okay, you can see that large speculators are still heavily short, and so far are slowly, okay, approaching these extreme levels here, going back to October of 2022. Also, we have seen these levels back in 2019. So if we move into these extreme zones, and potentially we just will stay here or trading around 1800 or slightly lower, I just think that maybe this kind of a extreme in sentiment could be opportunity to look on the other side, because we know that markets move in sentiment, and when sentiment moves into some very extreme levels, then just be aware of the opposite. And clearly, because of a very strong and massive drop here in a very short period of time, there was a lot of fear involved, and this kind of a price action could even surprise a lot if we see a lot of traders and investors if we see a reversal. So as I said, I think that that's a major support here for gold. Also, if we take a look, silver, not really the ideal structure to say that low is in, okay? But if you look here, on this chart, it's very messy, no doubt. But whenever the price action, it's very messy, like this one. Okay, what will help you to zoom out and check where we had the previous very strong reaction, and was clearly here back in 2020 from a new low, when we see a very strong move to the upside, clearly in impulsive fashion in 5 waves. And after that, we just moved into this correction. So this is now a complex correction. That's why times are a little bit more trickier. But on a longer scale, I still think that silver has a lot of upside potential as long as we are trading here above this March 2022 low. So potentially we could be here trapped in this ABCDE triangle. Maybe the important support will be around $20. Okay, it was this swing support going back to March, as I said already earlier, that a lot of markets retraced all the way back to March levels. So maybe this one will still retest this level, but eventually I think that silver could attract new buyers by the end of the year. Okay, if we suddenly, let's say, we just rally from here and we close on a daily basis above 22.30, around $22.50, then I think that wave C is already done here. Okay, so both gold and silver are, in my opinion, moving into some very, very interesting levels. Okay, now let's take a look also on what I have here in Ethereum, Bitcoin, Ripple. So cryptocurrencies obviously are still in a pullback. Okay, they're still in these corrections. You can clearly see that market is failed to see any kind of a move higher. It would be definitely different if through the weekend we would have some kind of a bullish resumption. But now when stocks get lower, and dollar keeps moving higher, I'm just afraid that even cryptos will retest the lows here. You just have to respect the substructure. So if you look here, that was a free wave rise. Okay, let me open the 4-hour here. Okay, so clearly that was a free wave rise. So adjusted the wave count earlier, and now looking this to be wave 4 ABC, expecting more weakness. Okay, maybe this wave 4 should be labeled as a triangle because of 3 subwaves here. So anyway, that was a free wave movement, and now you have a massive reversal. You are testing the lower side of this channel. Okay, so I think that potential breakout could cause some volatile moves to the downside. Eventually, we will see this 1,500 retested, then a potential reversal by the end of the year. And as I said, by the end of the week. And as I said, we have also dollar index maybe looking for another final push to the upside. So inflation data, maybe this one will be the catalyst, the trigger, maybe more risk off because of this events between Hamas and Israel will cause some more dollar strength. So we'll see, but definitely the substructures, or just generally speaking, looking at the trends, it looks like that these trends will still remain intact for now, at least in the short term, for more crypto weakness. If we look on Bitcoin, you can actually see here that that's hourly chart. Okay, that was a very strong reversal, and that was the free wave rise. Okay, so saying that this one is going straight to the upside, I mean, definitely anything is possible. Okay, but for me, it's important to look of what's more probable. And for now, based in Elliott Wave terms, I just think that there is a chance for more near-term weakness. if we take a look also on Ripple, Ripple also looks like it's forming some kind of a triangle here. Here's the hourly chart. Okay, so even this one is trying to break to the downside. Watch this 50 cents. If are taken out, I just think that maybe the final move to the downside toward 40 cents could come, and then potentially we could see some price stabilization. So even the Ripple here in the short term is not looking good. Looking at Dash, also, yes, let's take a look here. Strong drop during summer, then only 3-wave rise. Now again, market is trying to turn to the downside. So even this one is also not bottoming yet. Okay, so just be aware of what is going on. But if you're more like an investor for a longer period of time and you're always accumulating at lower levels, then maybe this next support levels is something that you are waiting for to add to your portfolio. Okay, traders. So that's it for today. Hope that you enjoyed these 3 sessions. I have a few minutes left actually. If you have any kind of questions, let me know. If not, I will sign out, and I will definitely return again next week with our free session, free webinar. So also make sure that you subscribe to our YouTube channel here, or maybe on a TradingView. Press a like, and with this kind of approach, obviously you will support our work, and I will make more of those free sessions in the future. Okay, traders, enjoy your day. Be careful out there because markets can be very volatile during these geopolitical events. So make sure to trade small and trade safe. Bye.